Well, right now we're going to talk more about the China story involving Google as Google redirects folks from its Chinese search site to its Hong Kong search site. To talk more about that, we're joined now by Clay Moran, who's an analyst at Benchmark Company. And Clay, as I was talking about earlier, we saw the Google shares definitely react as this news started to come out, and they've gone higher, reversing after being lower earlier in the session. Do you think that this is good news, that we're getting confirmation about this?
It's really too early to tell. I would think it's not surprising news and therefore not particularly good. I think, it could bring this issue to a close for the time being. But my initial take is that they've switched the results to the Google Hong Kong site, which means they're uncensored, which means that the Chinese government is probably going to prevent them from reaching the Chinese people after a certain, probably short amount of time. So I'm not sure that this indicates they've come to some agreement with China for a new home, as it said, for Google search in China.
Is this more sort of forcing the Chinese government's hand?
That's that's my initial take, yes. This is forcing the Chinese government hand to actually take the step in shutting down the access from the Chinese people, yes.
Clay, what does this mean for Google?
Well, clearly this is a pretty significant stance they're taking against censorship and, sort of for the human rights activists whose email accounts they claim were hacked. So it's a pretty important move in terms of their brand globally and taking that stance. From a financial perspective, it's not that meaningful today. It's probably about 1% of their revenues that will be lost if our interpretation is accurate.
Right.
But it does, of course, reduce their longer-term growth opportunities some, and that's, unquantifiable at this point in time.
Clay, could this also mean some expansion in South Korea and Japan for Google?
It's possible that, it would make sense for them to divert their resources to other areas of Asia. Google, as far as I know, hasn't indicated that yet, but I think that certainly makes sense.
And what about in terms of what you should do with the stock at this point, Clay? I mean, overwhelmingly, analysts recommend buying Google shares. Do you think that that's what should happen, especially if the stock happens to fall on all of this Chinese business?
Yeah, I don't think, this China news itself is a reason to buy or sell the stock. I think the stock, though, is attractive here. Obviously, Google's a great company with still very good growth prospects regardless of China, trades at a pretty reasonable valuation at about 20 times earnings, and of course is benefiting from not only a cyclical recovery, but the secular shift of advertising online. So we have Google rated to buy, and we're a believer.
Clay, could I ask you in our last 20 seconds of the Google departure from China, what this might mean for Baidu? Certainly
a positive for Baidu. We've seen Baidu shares react that way so far. Baidu is the substitute for those users that are using Google today. They'll most likely switch to Baidu, so it's a big positive for Baidu.
All right, Clay Moran joining us from Benchmark to talk about this Google news that we're, again, getting the Chinese search site redirecting to the Hong Kong search site. We don't have any sort of formal announcement that Google is pulling out of China, although we did hear from the U.S. State Department today that such an announcement might be imminent. But again, we're all still operating in theoreticals and possibilities and not in any concrete removal from what's going on in China.